Hello, and welcome to Stock Market Fever. Today is Wednesday, June 8th, and this week our favorite meme stock is back in the news. In this video, we will look at GameStop to see if the meme-fed craze which made instant millionaires in 2021 will repeat in 2022. It has been over a year since the beginning of 2021 when the meme world went flash mob nova and ganged up on GameStop stock, which had been excessively shorted to the $5 or less range by hedge fund Melvin Capital and others who believed the stock was essentially worthless in the digital age. Melvin Capital's bet seemed to make sense based on the company's financial performance and overall vision that people would stop buying games from them as gamers switched to digital. Melvin Capital looked at GameStop, licked its chops, and figured that GameStop would soon be worthless, making Melvin Capital a big winner. But the stock had been overshorted, making it vulnerable to a new phenomena: social media trader flash mobs. Around 140% of GameStop's public float had been sold short, and the rush to buy back those shares to cover those shorts as the price surged drove it even higher. Users of the subreddit r Wall Street Bets, an internet community on the social news website Reddit, were initially and principally responsible for the short squeeze. However, a handful of hedge firms also took part. The short squeeze peaked on January 28th when the retailer's shares reached a pre-market value of roughly US $500 per share, nearly 30 times the $17.25 valuation at the start of the month. Instant millionaires were made by teens and millennials who had hitherto never traded before, and the idea that the little guy could gather up en masse through social media to take on big, giant institutional investors became the stuff of legends. It is ironic that much of the GameStop buying frenzy was instituted through the brokerage named Robinhood, of legend to have stolen from the rich, in this case institutional hedge funds, to give to the poor, the millennials supposedly. The story pretty much ended there, as there have been some big swings in GameStop's share price, but the stock has been on a more or less downward trajectory since April of 2021, touching softly back to earth to the $100 level and barely above this past April 2022. If we lived in a non-bizarro world, pronouncements by the government would have their desired effects. If the government issued a warning to beware of this or that, well, one would expect people to avoid this or that. And this is what should have happened when at the beginning of June the SEC released a video with a game show format mocking meme traders and cautioning people to do their research before investing. But it seems sometimes as though we do live in a bizarro world, and the confluence of media pronouncements that meme trading was dead, combined with increased media coverage of the rising short interest in GameStop, along with the government mocking the meme traders, seem to have triggered the beginning of a new buying frenzy in GameStop. These meme buyers are betting and hoping that the government and shorters will get their comeuppance, and the buyers will get rich in the process. Short sellers have been getting braver during a larger market sell-off that has hammered riskier post-pandemic favorites long popular by retail traders, as seen by increased bets against meme stocks GameStop Corp. And AMC Entertainment Holdings. According to statistics from S3 Partners, overall short interest as a proportion of the company's float remained at 24% for GameStop and 22% for AMC, near their highest levels in a year. Thus, in the course of 1 month, as a result of the incessant media coverage against the shorters, and boosted further by highly offended meme traders who felt insulted by the government's video, GameStop has shot up from the $78 low to about the $120 range, and on June 7th spiked over $18 per share to close at just over $146. So where does GameStop go from here? What do industry analysts have to say about GameStop's future? Well, overall, they are not optimistic. As of May 27th, Schwab Financial rated GameStop with an F, its lowest rating, which is a clear sell. And equally pessimistic about GameStop, analyst CFRA rated the shares a strong sell on June 2nd. But Market Edge on June 3rd recommended being long on GameStop. They based their recommendation on technical performance, noting, quote, "The current technical conditions for GameStop is strong, and the chart pattern suggests that upward momentum should continue." And what do we at Stock Market Fever forecast for GameStop's future? We'll be glad to tell you in a moment, but if you like this video and would like to see more like this, please click the like button and subscribe to receive future stock market news, analysis, and alerts right here at Stock Market Fever. Thank you very much. Okay, back to our forecast. While we do not offer investment advice, we gladly offer our opinion. And in our opinion, GameStop stock will continue to have wild swings due to the reawoken meme traders flash mobbing the shares to squeeze out the short sellers. We believe there is nothing fundamentally that GameStop is doing that warrants its current price, and therefore, at this point in time, when you buy GameStop, you are no longer betting on the stock itself, but are instead betting on what others in the mob will do. Will they continue to mob the stock up? Will short sellers fearing a squeeze panic and buy to cover? And even if the meme mob continues to succeed in driving the stock up, at what point do people start acting as individuals and start to cash in their chips, fearful that the house of cards will come crumbling down? Thus, in our view, we do not believe that GameStop is a good buy at the $120 price range, or even just over $100. Not based on the stock's fundamental business, which has been losing money, and not based on future business prospects as they try to pivot to a winning model. This is not to say that the stock could not rise significantly in the short run if the frenzy continues, but that a short-term frenzy is not a good, sound investment. This is our opinion. But what do you think? Where do you think GameStop is heading in the short run and long run? Would you recommend buying, selling, or holding, and why? Please leave your thoughts and comments below, as we'd love to hear from you. And please be sure to like and subscribe to Stock Market Fever for future actionable stock market news, analysis, and alerts.